everyone. You're watching CoinDesk Live. We're coming to you from Consensus Hong Kong, and our next guest is at the desk, Hex Trust CEO and co-founder Alessio Quaglini. Alessio, great to have you here with us.
Thanks for inviting me.
Thanks for being here. Thanks for being the partner for our desk. We've had a lot of great conversations from the desk. Before we get into it, talk to us about what your experience of Consensus has been like.
Oh my God, it's been really amazing. There's a lot of energy. The vibe has changed completely from the previous years, but there's still a lot of positivity. There's a lot of there's a lot of new ideas regarding financial institutions and how this final upgrade of their operating system is going to plan out.
We've been hearing that theme a lot. Tom Farley from Bullish was on earlier. He was saying the same thing, that this idea of really upgrading the operating system of finance is happening finally throughout the world. What do you think was the sort of biggest impetus of it? Was it Washington sort of relaxing the reins? What's your take on that?
I think obviously the regulatory green light, or at least a kind of a more amicable stance, has helped. Obviously, there's also been a few years of adoption of crypto assets that has also brought hundreds of millions of users to the blockchain, to using wallets, etc. But it's also the fact that finally we have found a first use case for blockchain technology that is really addressing one big, huge problems that we have in financial systems, the one of payments, which is $1 trillion problem. And it's a problem that financial institutions, especially banks, have actually kind of, I would say, avoided to solve for decades.
Well, just to follow up, I feel like banks, that's how they made money, right? And then they have people like yourselves and a lot of the people at the show who are saying, okay, but you created friction, you created higher fees. Technology has evolved. We can reimagine that. So as part of it, them recognizing, let's finally step into the future instead of being sort of levered to the past.
It's been until now a monopoly, but a monopoly can be also an efficient monopoly. In this case, we've had a monopoly where basically when I want to transfer my funds from one country to another country, it's not that I know that it would take 3 days. I don't even know how long it would take, and I don't know how much I will pay in fees. So there is the fact of lack of efficiency. There's also a kind of a lack of transparency. And when you run a monopoly for too long, without addressing these issues, then somebody will come up with a solution eventually.
You know, it makes me think about the conversation that's being had in the US right now between the banking lobby and the industry when it comes to stablecoin yield. Of course, you are offering a solution to folks, but you rightly described a monopoly, right? Do you anticipate banks easily participating in this new system, or do you think they'll have to be pulled into the future?
I think obviously they will have to be pulled, but it will be kind of a process, right? Once you have the first ones that probably do not have too much market share, kind of entering this space to acquire more market share, then the other ones, they will have to follow suit. Otherwise, if they don't follow, they will lose market share. So I think it's obvious. The additional efficiency that we have in using stable coins, and in the future in making also other financial assets as fungible as stablecoin, it's so clear that it's impossible that banks will basically not participate in this process.
I'm interested in how Hex Trust solves problems for your partners. You know, you have a tremendous list of people that you're working with, you know, from Animoca, who's here, to IBM. So when they come to you, sort of, what are they asking for?
Well, I mean, really, in a nutshell, we provide two things, and both of them are from an infrastructure perspective. So we provide the whole wallet infrastructure. So when we talk, for example, about stablecoins, somebody will have to provide the wallets, and somebody will have to basically process transactions. Processing transactions not just from an operational perspective, but, for example, from a transaction monitoring and compliance perspective. So that's our first role. The second one is, there is still, stablecoin are still not fully blockchain native. There's still a connectivity with banks. So somebody will have to basically process this kind of conduit between the blockchain world and the bank account. When you want to subscribe or redeem from a stablecoin, when you want to exchange one stablecoin to another, you'll have to use somebody that provides the infrastructure for these transactions to happen.
What are your clients asking for? And also, what questions do they still have about this new infrastructure?
I think the main, what they're asking for is really a solution that kind of hides all the complexity of the blockchain. And it's not just one blockchain. We're talking about 50 blockchains, right? And we have to kind of make assets fungible across different blockchains. And our clients, they don't want to hear anything about that. They just want a kind of an API that solves this issue, right? And what was the second question?
What do they still need? What questions do they have?
Oh,
What do
the
they still need
question.
to understand?
I think the main questions they still have is one, obviously, about security. There's still kind of a little bit of a lack of understanding of how platforms like Hex Trust and other platforms have actually evolved and how secure they have become. And the second one is obviously compliance and regulation. The moment we touch something like fiat currency, whether it's a stablecoin or not, the moment we touch other tokenized assets, then regulation and compliance is inevitable.
Alessio, I've been focusing on stablecoins for a couple of years now, and a lot of the travels we've been doing have been speaking to people around the world who are seeing the opportunity around this. And I've asked this question to a number of people, but I think you'd have a great insight. I feel like we're not that far away on the horizon when we sort of don't have to go back to fiat, where this exists in digital ecosystems and people are really just transferring back and forth. And so, like, do you see that as in the next 2, 3, 5 years that fiat starts to take a back seat?
It'll happen. So imagine that right now, as I was mentioning, part of the stable coins is still basically linked to banks. So the reserves are still with banks. The collateral is still with banks. And even more than that, the FX still happens at the banking level. There's really not much liquidity at the stablecoin level. So I think all these services that will have to be brought natively on chain if we want to see this full transformation to happen, and basically for capital to be global, fungible, and liquid across the kind of blockchain communication network.
Alessio, thanks so much for joining us at the desk. It was a pleasure having you on, and thank you again for being our desk partner.
Thank you so much.
Thank you, Alessio.